High Yield Future Tense is a book that, as the title suggests, looks forward. Not a retrospective, not a how-to basic book, of which there are some very good ones. The book is divided into 4 sections for a total of 18 chapters. The first we call Market Dynamics, and within that we have some very interesting contributions. Edward Altman and his colleague Brenda Keene. Ed is really one of the giants of finance, talking about the concern that a bubble is developing in the high yield market, how that will play out in 2016 or 2017. Former colleague of mine, Chris Garman, is talking about how the market is likely to evolve as a result of a long-term change in the market that he sees as likely to shake out some of the weaker, lower-rated credits in the market. Oleg Milentiev, also a former colleague of mine, talking about the issue of liquidity in the secondary market, and I think very importantly, in a forward-looking way, discussing how the market will eventually resolve this problem of the reduced tradability of high-yield bonds. The second section of the book is on active management, and we have some very different views. David Ranson talking about the relationship between the gold price and spreads, and shows that at different levels of risk within the high-yield market, the influence of these two factors differs. A very different take, very different way of looking at that decision of how much credit risk to assume within high yield. David Towell talking about the distressed portion of the market and how that has changed, and how distressed players have branched out into other activities, including going overseas, getting involved in municipal defaults, some becoming activist managers and playing in the equity part of the capital structure. The third section of the book is entitled Analytical Innovation, and we have 2 great examples of quantifying very important aspects of the high yield market that have been difficult to quantify in the past. So Alex Dill talks about covenant packages. Steve Ansack similarly doing some very good work on quantifying the liquidity of individual issues in the bonds. Another thing that's always been understood to matter but very hard to get a handle on, and the proxies that have been used really haven't been adequate in the past. And the final section of the book is on benchmarking, and there we bring together the academic perspective with very sophisticated quantitative analytical techniques, Frank Riley and David Wright, and then a practitioner, Bob Critchoff, talks about how the issues involved in construction of the indexes can result in 2 indexes, both purporting to show the same thing, can wind up with very different performance numbers for a period of time. My own contribution to the book comes into the area of analytical innovation. And what I address there is really the question of confounding factors. If you take an elementary statistical course, they'll give you the example of a study that's done of reading levels of school children, and they find that the tallest children have the highest reading scores. Of course, what that leaves out is that the older children have higher reading scores, and they're also taller than the younger children. And I find that in many aspects of high yield analysis, we have this kind of a problem. If you look at risk premiums on different industries, what you're capturing is not entirely the difference in the risk of the chemical industry, the paper industry, cable, television, or what have you. You're really capturing the difference between the ratings mix. Some industries have more BB issues and some have more CCC issues. So I go through this theme in a number of different ways and show how we have to really be very rigorous in making any of those valuation comparisons. High Yield Future Tense provides a new perspective that's never been offered before on the high yield market, how it works, and how people can make money in it.